Everyone's watching the market bleed red and wondering if it's time to panic. But what if the sell-off you're dreading is actually the best thing that could happen to you right now? We're talking about trillions of dollars evaporating from paper valuations, headlines screaming correction, and yet some of the smartest money in the room is quietly smiling. Let's back up and talk about why markets fall in the first place. Because it's almost never just one thing. It's a pressure valve releasing months or years of built-up excess. Think of the economy like a pot of water on the stove. If you never let any steam escape, eventually the whole thing boils over and makes a much bigger mess. Just a couple of years ago, the narrative was unstoppable. Rate cuts were coming, soft landings were guaranteed, and every asset class was getting a participation trophy. Now that same crowd is whispering about recession, and the confidence that once fueled the rally has quietly slipped out the back door. What's psychologically brutal about a correction is that it hits hardest right when you are finally starting to feel good about your portfolio. Nobel Prize-winning economist Robert Shiller has spent decades documenting how investor sentiment swings from irrational exuberance to irrational despair, and somehow every single generation is shocked when it happens to them. History is brutally consistent here. Markets have declined 10% or more in roughly 1 out of every 2 years, going all the way back to 1928. And yet, the long-run trajectory has always been upward. Every crash feels like this time is different. And every time, that sentence turns out to be the most expensive 4 words in investing. There's a concept called price discovery. And a healthy correction is basically the market doing its homework, stripping away the speculation, and recalibrating what things are actually worth. The community of long-term investors has a saying that gets passed around like scripture. The market is a device for transferring wealth from the impatient to the patient. One of the biggest misconceptions is that a declining market means the economy is broken, when really, it often just means assets got ahead of fundamentals. A stock dropping 30% after being priced for perfection isn't a disaster, it's math finally catching up to reality. Here's the practical lesson that history keeps handing us for free. The investors who built generational wealth didn't do it by timing the bottom perfectly. They did it by having a disciplined strategy that allowed them to keep buying when everyone else was selling. Position size matters more than conviction. You can be right about an asset and still blow yourself up if you bet too big too early. The actionable move here isn't to predict when it ends. It's to decide in advance what you'll do at various price levels so that emotion never gets a vote. Process beats prediction every single time. And the traders who survive long enough to compound are the ones who made rules when they were calm and followed them when they weren't. There's something almost poetic about a correction. It's the market's way of firing bad passengers and rewarding the ones willing to sit through discomfort. Discipline, sizing, and consistency aren't glamorous, but they're the actual cheat code hiding in plain sight. At the end of the day, a healthy decline resets expectations, flushes out leverage, and creates the fertile ground that the next bull market grows from. You don't need to be afraid of the red, you need to be prepared for it, which is a very different emotional posture. Ironically, the most dangerous market isn't the one falling with everyone watching, it's the one rising with no one questioning it. When complacency peaks, that's when real risk quietly maxes out. And by the time the headlines confirm it, the easy money has already been made on the other side. So the next time the market drops and your feed fills with doom, remember, you're not watching a system fail, you're watching a system breathe. The investors who understand that cycle don't just survive downturns, they use them. Whether you're sitting on cash, waiting for opportunity, or already positioned and riding out the volatility, the real flex is staying rational when everyone around you is losing their minds. Comfort with any outcome comes from preparation, not prediction. And preparation is always a choice you can make today. And if you're ready to put that mindset to work in real assets that don't vanish overnight, we can help you get started, whether that's real estate investing, home contracting work, or finding the right lenders. Check out our links in the description below.